Hi everyone! Wall Street has been slowly but surely rising since the start of the year. April was another positive month for stocks. In April, all benchmark stock indices gained roughly 2.5%. They also closed last week in the black. It's a good sign for market participants who are betting on an upward movement in summer. This scenario looks likely unless the Fed makes an unexpected decision. Now investors are widely expecting the regulator to take a pause in monetary tightening. If so, it will be extremely favorable for stocks. However, analysts at Bank of America anticipate a negative trend in May, which is likely to be followed by a summer rally. Soon, traders will get more hints about the Fed's future plans for monetary policy. The Fed meeting will take place this week. Investors are waiting for the rate decision and clues about further steps. Employment data for April and other important indicators will also help speculators get an idea of what strategy to choose. Watch our video review and find out more market news. Please leave your comment down below. Let's start. For the last 2 weeks, investors have been closely following the publication of earnings reports. They somewhat shaped market sentiment as the economic calendar was rather uneventful. Despite the banking crisis and the rate increase in March, many companies revealed excellent quarterly results and revenue forecasts. Upbeat profit results were fueling risk appetite until US GDP data was revealed. Fresh figures reinforced recession fears. By the end of the week, sentiment had improved. Wall Street climbed on Thursday and Friday as investors locked in profits amid better than expected earnings reports. Concerns about the economic downturn caused by the Fed's aggressive tightening waned. The Dow closed on Friday with an increase of more than 270 points and reached its 10-week high. The S&P and NASDAQ gained almost 0.8 and 0.7% respectively. ExxonMobil reported a record first quarter profit that was more than double from a year ago and topped Wall Street estimates. Intel shares jumped by 4% after publishing quarterly results. The upward potential of the NASDAQ was limited due to Amazon. The e-commerce giant shares fell by 4% despite an upbeat earnings report. Snap and Pinterest stocks dropped by more than 15% because of disappointing second quarter forecasts. Apart from that, traders kept an eye on the banking sector. First Republic shares plunged by 43.3% after the bank said it is likely to sell its assets. At the start of the new week and month, investors continued to follow the news about this bank. Regulators seized First Republic Bank and sold its assets to JP Morgan Chase & Co. on Monday in an effort to restore confidence in the financial system after the collapse of 3 regional banks. Trading on Wall Street was lackadaisical. Stock indices showed a mixed dynamic. It was quite predictable. Traders are cautious ahead of the central bank's meetings and new economic reports. The main stock indices finished April at high levels. The Dow Jones logged its best monthly gain since January, rising by 2.5%. The weekly increase was 0.7%. Investors are now focused on the new earnings reports, fresh economic data, and the Fed's rate decision. Many speculators expect the Fed to raise the rate by another 25 basis points on Wednesday, although analysts struggle to predict whether the central bank will maintain its hawkish stance until the end of the year or start cutting rates in the second half of the year. This is the main intrigue of the May meeting. This meeting could be a turning point for the stock market. Consumer sentiment improved in April while the core PCE price index exceeded forecasts in March. Investors are now waiting for the NFP report and manufacturing and services PMI indices. They are sure to help investors better assess their economic prospects and predict the Fed's plans for monetary policy. If there are no signals from the Fed, speculators will make trading decisions based on their incoming data. What's more, they are trying to find some similarities between the economic and earnings reports. However, there are none yet. This week, Pfizer, AMD, Uber, Qualcomm, and Apple will unveil their revenue results. The S&P 500 advanced by 1.5% in April, logging a rise for the second month in a row. Its weekly gain totaled 0.7%. On Monday, it stabilized after 2 days of growth. It stopped near the important resistance area of 4,217. It will not be easy to break above this area. If bulls manage to push the index above this range, the index could reach 4,325, the high of August 2023. To do so, bulls need strong drivers. Fortunately, there will be plenty of them this week. However, the question is whether they will be favorable. If we take into account the earnings season, the prospects are bright. According to FactSet, 53% of companies from S&P have already revealed their earnings reports for the first quarter. Notably, 79% of those companies have exceeded expectations. The results are above their 5- and 10-year averages. The sentiment on Wall Street will largely depend on the Fed's meeting. As the majority of investors are expecting a 25 basis point rate hike, there will hardly be any surprises in this regard. However, Jerome Powell's speech at the press conference may either boost bullish sentiment or undermine the current rally. On the reasons to stick to aggressive tightening is the overheated labor market. Last week, initial jobless claims amounted to 230,000, which was below the forecast reading of 248,000. This is the lowest level in the last 3 weeks. Besides, the banking crisis is in the spotlight again. It's exerting pressure on risk assets. They keep growing, albeit rather slowly. There are no strong economic reports today that could push them to new highs. By analyzing the current rally, one might have probably noticed that demand for shares of companies from the industrial sector is rather low. The Dow Jones added 2.5% in April. It remained in the range of November 2022. The NASDAQ 100 also showed a moderate rise. It climbed above the trading range of the last 6 months, gaining 1.6%. In April. After a steady rally in March, the growth of the index slowed down significantly despite positive earnings reports of the tech giants published last week. The weekly rise was 1.2%. It means that its rally is fragile as it has no drivers. The NASDAQ is largely up amid market expectations and hopes, so May could be a less positive month for the index. Analysts of Bank of America assume that stock indices are likely to resume a downtrend in May. However, they will recover in June. The S&P may surpass its previous highs, potentially adding 5%. If so, it will advance above its previous high of 4,325. The bank suggests investors buy shares on a potential drop in May before the rally starts again in the next months. As for the NASDAQ, bulls are still unable to push it above 12,500. A downward correction and a new consolidation phase may occur again. If the bullish sentiment persists, the index could approach 13,600. The index will hardly be able to climb higher, analysts stressed. That is all for now. We make new video reviews for you every day so that you can keep close tabs on market developments. Do not miss our next video review. See you.